Good morning, good afternoon. Welcome to Develop Your Edge with Anthony Crudele. I'm your co-host, Tom Schneider, CMT for NinjaTrader. Before we get into the good stuff, I want to remind everybody, futures and options trading contains substantial risk, and not for every trader you could potentially lose all or even more than all of your initial investment. That's why we recommend you use risk capital. What is risk capital? It's money you can afford to lose. Doesn't affect your lifestyle, doesn't extend your retirement horizon. Also, want to remind everybody that past performance is not necessarily indicative of future results, and what we talk about here in the show contains neither trade recommendations nor financial advice, but should be taken for educational purposes only. And with that out of the way, I'd like to welcome back Anthony Crudele. How you doing, Anthony?
Good, Tom. How are you? Happy New Year.
Yeah, happy New Year to you. I think we're getting around that time where it might be a little bit too late to still say that, but it's our first show of the new year, so I think we can get by.
Yeah, my cutoff's the 15th. After that, I'm done. If I
Okay.
haven't talked to you by then, that's it.
Well, that's good to know. I've never heard it, a date put on it, so I'm going to use that going
Level
forward.
the level, Tom. Level the level.
I love it. I love it. So, yeah, how was your holidays? Great holidays? Good holidays?
Yeah, great. I hope everybody out there also had a great holiday season because we're getting back into some crazy markets, and it's good to start off with you on a CPI day. I know that we're going to talk a little bit about how I go about trading the CPI days because I think that these days have now become some of the toughest days to trade. I actually don't even recommend for a lot of newer to intermediate traders even trading these days, but I'll go over some things that I think are important to look at when trading CPI. And also, I want to go over New Year's resolution. I'm not somebody who does dry January or any of like these hardcore diets or join the gym. I do really pretty much everything that I want to do throughout the year. And it's always within that, normal amount of what of what you're going to push it. Right. And I think that just being organized in life and trading is extremely important. So I'm not somebody who really holds, New Year's resolutions, too much. But there are two things that I want to talk about today that I think are extremely important that every single year that I look at when it comes to a new year in trading, and I think in life as well. And that's self-awareness and situational awareness. And the reason why I think those two things are always a focus for me is because I think that most traders out there know that when you're doing something wrong in trading, or if you're drinking too much, or if you're eating too much, or if you're doing anything wrong, you have awareness that you're doing that, it, but are you working on fixing those issues in the moment? Trading is an in the moment business. And if you don't fix things in the moment, it doesn't matter what your homework is. It doesn't matter how much time you spend studying charts, thinking about what are the right things for you to do in certain situations. Should I add here? Should I not add here before you get into the trade? Because once you get into the trade, it seems like everything can change, and what I've noticed is if you look at the top athletes and the top performers in anything in their class, what is it that they're really good at? Roger Federer, Tiger Woods, Tom Brady, just to name a few, right? What are they great at? In the moment, they seize it, they slow it down. That's the difference. Tom Brady is not the best thrower of the ball. I mean, he's probably got the greatest work ethic. You'll hear Tiger Woods, Michael Jordan talk about that as well. Roger Federer, all of these great players in sports. And I compare sports to what we do because we get up today, we have our breakfast, we have our coffee, we sit down, and we're going into, I think, an arena. Even though I'm not in the pin anymore, I still kind of feel like that. So I compare what we do to sports, and I look at what the best do. And what they have is great self-awareness and great situational awareness, right? How many of you have watched a football game or a soccer game or anything, and you're like, dude, just kick the ball over there, or just throw the ball over there, or just get rid of it. And you're like, what is he doing? And that's situational awareness. And self-awareness is like, how am I feeling at this moment? How am I coming into today? If you've got health problems, family issues, certain things going on, when you come in, subconsciously, you're distracted. So you have to work on self-awareness to understand that when you come into the arena, if you're not sharp, the market's going to take advantage of you. And so those are just two things I think you always keep at the back of your mind when you start the beginning of the year and you look to get better in situations and you look to get better at self-awareness.
And so, Anthony, and I like your analogy of sports. I'm a sports guy. I think a lot of our viewers probably are followers of sports. But how do you know when one you're addressing one more than the other, let's say, or you're neglecting one more than the other? Is there something you can do to kind of keep it in check that you're you've decided to have this resolution? I'm going to be more situationally aware. That's something we talk about pretty much every day. But the self-awareness, I think, how can you do those? Is there a checklist, or is there something that you can do to be more self-aware?
I just think it's, can you be honest with yourself about where you're really at? When it comes to self-awareness for me, my worst days are coming usually after my best days. And why is that? Well, you come in, you feel great, you feel aggressive, you feel comfortable, and you come in and your defense is down, right? So that's, in that moment, I come in, and I did this even last year, my worst days follow my best days. And I look at it and go, how many years have you been doing this that you just still can't kind of get better at this? It drives you crazy, right? And so it's just about knowing, because I've done something in the past and what sort of pattern of bad habit maybe we've picked up over the years or over the months or weeks that we've been doing this, because I don't think it really matters how long you've been doing it. You're always kind of picking up bad habits and trading along the way, unfortunately. And what happens is that you just have to be honest with what you're experiencing emotionally, physically at that moment. And then the situational awareness, it does work together with it. So like a day like today with a CPI, when I get to the charts, I'm going to talk about today. I have a conflicting situation here, right? I'm actually long some S&Ps on a swing position using some micros and actually SPY. I know we talk about futures, but I'm trying to be really small with this position because of my reasoning. And I have a really wide stop, so I have to be really small with it. But then I come in intraday today and I look at what happens after CPI, and it's like, whoa, it gives me a short signal. It's like, well, what do? I'm already long, and I'm actually long some stocks too. Do I step in on a CPI day and get short? And so, one of those things is that's the situation where it's like, okay, I kind of have this hidden bias or underlying bias of long because of what I've been seeing on the weekly chart, which like I said, I'll get to. But then at some point, I come in and I have a bearish day, like today, it sets up, and then, I see as we're rallying right now, and you're like, well, what do you do? Right. And so that situation comes up and you have to say, okay, Anthony, what leans heavier towards the other? And that's just what you have to do. I mean, so it's like self-awareness and situational awareness. The old me, like on a day like today, I might have covered all my longs, try to get short for a day trade, and then try to pick up longs in a different way. Instead, I actually went and started to look at event contracts to play that short to offset my longs. So, you just get smarter with execution. I mean, I think that's what it comes down to. I think we all know ourselves. We all understand situations. You don't need to be a macro expert to understand what's happening with CPI, right? You could just go on Twitter. It's just bombarded with CPI stuff. And I don't really care that much about what the number is as a trader. I just care about the reaction. So I look at it, see it, and I know it's going to be a volatile day, and you go from there. So I think that they definitely work together, because having situational awareness without using self-awareness, that's a problem.
So you mentioned event contracts, and I was going to ask maybe later in the show, just because I'm thinking of event contracts on a day like today. It seems very interesting, to say the least, because it is so volatile today, and there's so much fluctuation. There are different contracts. I was just going to ask you how you might trade them if you're not in a position, but you just answered that question. You're using it almost as a hedge to your longer position. But how might you use event contracts, or is this a good day to use event contracts, or is it something you might avoid if you hadn't had that underlying long for your swing trade?
I think today's the best day to use event contracts. Number one, they're called event contracts. So, yeah, I think they're really more based towards event days. And I think that as more products come out along the way, you're going to see more and more things geared towards events. They have binary outcomes. But what I like about that aspect of it is that I bought the trade. It's a little bit different than what you have when you're doing, something like a weekly option, right? At the end of the day, for me, I'm a day trader. So I like to know if I'm right or wrong. And when I buy the position, with an event contract, I buy a yes or I buy a no, which is a call or a put. I know the outcome. I know the risk. I bought it. I own it. And for me, I don't have to manage that trade. So that's why I really like those for these types of days. Because right now I look at it and go, if I buy no's, which I did not, I was looking at them to do it and I didn't because I was coming on here and I was kind of like waiting to see how the day was going to set up. But if I did, I would buy that no and just let it go. I mean, I don't really manage it. Now, it doesn't mean that you can't trade that no, which is a put. You can get in and out of them as you want. They're just basically, a lot of people maybe know what a 0 DTE is. So very similar. Okay. So it's just a daily option, but I like them for event days because you bought the trade. I mean, there's something psychologically, I think, really good when you have a volatile day where you go in there and you just pay for your risk and it's over. I think that most new traders, they could hear people talk about managing risk all they want, but they're really poor risk managers. Let's just be honest, right? I sucked at it. And then eventually you get better at it. And to this day, because I like to be aggressive in my nature, a lot of times I get caught up getting too aggressive and you can get smoked even trading micros on a day like today, being right versus like buying an event contract and just being like, you know what, I'm going to accept this outcome. Because this is what I'm seeing today. So it's just another tool in the basket of tools that we have.
Awesome. Why don't we get to the charts? Let's take a look at how today's setting up for you.
So when I look at, especially in January, right? When I look at what I think for the year, I go to the weekly chart. And I go to the weekly chart to get that big picture perspective about what's happening in the market. Where are we? Right now we're in a bear market. Despite what some people may say, I believe that we're still in a bear market. We've been trending down the entire year of 2022, as you can see in the weekly chart here. This is a weekly E-mini S&P chart up here. And I like to go to the weekly and I like to I'm just going to use one moving average here. And I just pull it up and it's a 52 period moving average. It updates on each tick. And you say, well, why would you use that, Anthony? Well, I use a 52-week moving average. It's 52 period. It's a weekly chart. It's a 1 year moving average. If you go back in time and you look at bear markets, when we're trending down for a period of time, you could even go back. I'll scroll a little bit and maybe I'll scroll and tighten it up a little bit down here. You go back and look at COVID. This I don't consider a bear market, right? Even the beginning of end of 2019, I don't really consider that much of a bear market. Too short period of a time with a flat 52-week moving average. 52-week moving average moving up here. You have this dip. These are just one-off events in that we've had, right? This is a bear market, right? Closing weekly below it, weekly pitching down. So we have a bear market, right? And so I like to look at that for perspective and say, okay, this is not something that you just flip a switch and changes. Okay. So what has to change for me to think that we're going back into a bull market? So obviously weekly closes above the 52-week moving average and closing above this downtrend, which we've talked about previously. And we said, I can't believe that this downtrend continues to hold. It's almost laughable, right? Where you look at that and you say, wow, I wish I would have sold it there, and it's just as like every time it gets up there, you're like, oh, they're going to go through it now. And it hasn't. So I like to get that perspective. So I understand that we're overall in a bear market. And then I come down and I narrow it down a little bit more. And actually going to make this wide again. And then I say, okay, overall, we're in a bear market, but what the beginning of the year tells us a lot of times will be what we think, what the year may set up to be. So like the first week of the year is a very important week to me. So what I do is I look at the first week of the year and I look at where we opened, which is roughly 38.95. If I even make this even bigger right here. And then similar to what I do with my daily stuff, intraday stuff, which we'll get to, I pin a order flow VWAP to it. And so when you do something like that, let me actually just put a horizontal line at the opening range of the year. So the first day of the year, right there. So it's roughly 38.95, 3,900. All right, I just drew a line there to show you what it looks like. And so that's a pivotal point for me. When you look at the beginning of a year, everything is marked to it, right? Tesla's what since the beginning of the year, S&P's what since the beginning of the year, NASDAQ is, whatever, right? Everything is back to that first point. So when I look at that, everything is marked to it. Now, what's a better place to mark it to is performance, right? So then you use an order flow VWAP because it tells you how is the market performing compared to the order flow VWAP, volume weighted average price, right? So the market is outperforming even the VWAP. So now you have where the market's opened, which everyone knows, and you have an order flow VWAP to the first week of the year. And if you go back and look at last year, look at the beginning of last year, which is this point right here. See the top of the trend line? We opened up, went down, and we stayed below the order flow VWAP because it's red the entire month, right? So when you look at January, sets the tone. That's what the words I was looking for just a couple minutes ago. Sets the tone for what the year may be. So now I have this conflicting thing right now, right? Where I have, okay, the overall picture is down, but for the year so far, it's telling me we are probably going to go up. So I look at that and say, I want to be long initially because this stuff to me is where I'm easier to manage risk. I can't be short and have a stop above 4,200. It's just not possible, right? So I could be long in pullbacks to the VWAP on the weekly with small positions. You could use options, micros, whatever you want, and have a stop below the weekly low and look for a big picture target up of right around 4,100, which is the downtrend and the 52-week moving average, which coincidentally are at the same exact price. So to me, this area is a key magnet probably coming up. So that's like my overall perspective.
And I've done this analysis in previous roles where, like you said, the first week, the first month sets the tone for the year. If you were to do that analysis on the big indices, you would find that when that happens, you can say that a high percentage, and I don't remember the percentages, these were analyses I did 10 years ago, but when you have an opening week and an opening month that are up, there's a certain percentage where the year will be a positive year for that index, and that percentage is pretty high. It could be as high as 90%, 85%, but it's a high probability analysis when you look at those two things, the first week of the year and the first month of the year.
Exactly. So when you look at the overall big picture, you know that, there's probably going to be some rallies to be sold. You think it's going to be a bumpy area. So what I look at initially for me was I bought some stocks. And I know we're a futures show, but just being transparent about the way I approach this, because it's not the easiest always to just step in and be long futures. The first week of the year, I was not really long futures. This past week and coming into this morning, I stepped in this morning and bought a small position long on the CPI because it pulled back near the order flow VWAP. So now my stop is relatively cheap, and you could expect a kind of a two-way move on a CPI, especially when the CPI wasn't just a massive surprise, right? And once again, I'm not a macro expert, but the number was pretty much in line. And so now you have a number that is really and was already anticipated, possibly priced in. So you can expect us to probably trade around where we were where the number came out. It's just one of those things you're kind of guessing is what will happen, right? And so you look at that and you say, okay, I could be a little bit long. And then that's, like I said, now let's just go to the shorter term chart. So this is how I went in and I approach day trading. And what was very interesting to me this morning, and which was like, when I looked at this, I said, okay, do you really want to be long here after I saw the open? Back in here in the pre-market is where I stepped in and started to get long a little bit in here. And you see how we had this. This was the reaction off of the number. And we actually almost went exactly to the weekly VWAP, the VWAP from the beginning of the year. And so you could see that had a massive rally off of it. And like I said, I'm looking for a much bigger target because it's a super small position. Then you come into the open, and everybody knows that's followed me on this show. What am I watching on here? Number one is a 3-minute chart. It's my favorite time frame for day trading. It's a bar chart. I don't use candles. It's up to you if you want to. It's just a preference. I don't think it matters one way or the other for my strategy, that is. I anchor an order flow VWAP to here. I use the 3 standard deviation lines now. Now the order flow VWAP that I anchored here is to regular trading hours, everybody, regular trading hours. I want to see it on the market open. I don't care what it did back here. I want to know what it does from the open, okay? Because even though CPI is an important point to probably anchor a VWAP, there's not enough volume, and it's pretty much all machines trading at that time. You don't have all the stocks open and everything participating right here. So I like the regular trading hours open. Then you look to see what the order flow VWAP does around what's boxed out here is the 3-minute opening range high and 3-minute opening range low. And then down below, you have the order flow cumulative delta. You guys are going to hear me talk about these order flow cumulative delta and VWAP probably throughout Develop Your Edge the whole year. These are things that you can get at NinjaTrader. And it's a special package that you can get added to it. I highly recommend if you have NinjaTrader that you go and get this package. It's well worth it. It's my favorite tools on the platform. So when you get this, now you look at it and you say, okay, opening range is the high. Once again, we like opening range. Breaks, order flow VWAP goes down below outside opening range. This is a bearish look. To me, this typically is going to be a trend down day. So now I have this conflicting things going on in my head. And when I saw this morning, and I saw, look at how much the cumulative delta was to the sell side. I mean, there was significant selling. They were just coming in, hammering the bid. And the market took it. If you don't know what this is just the net buying and selling on the bid and offer. So this is showing you how much is being sold on the bid, not how much is being, sold if you're working it on the offer. It's how much the sellers are going and hitting bids. So it shows the aggressive nature of a seller versus a buyer. And now you have selling really coming in and hitting it. And so my expectations for today are, and why I like event contracts for this type of day, is because I'm already long for a swing position. Do I want to rotate out of that position? What do I want to do? But I look at it and say, we're still in a bear market. And so I have a lot of conflicting messages. So I just go to event contracts and say, look buy some no's, buy some 0 DTE, puts. I look at it from that perspective because I can buy my risk. And if it does turn out in rally, fine, I've got a long position on. So I'm kind of almost hedging on a day like today in a sense, because I don't think you can really pick a clear direction here. I could sell you both sides of this. I don't know what's going to happen. I don't even have conviction on either side. So if I want to play it, I just play it within minimal amounts of risk. And that's just the way you can approach it. And that's the way I look at like days like CPI, where you look at it and go, I think we're going to find out really what the market thinks a couple days from now, because let this stay settle. Today's not a day where I think you get rich. You don't have one of your great best days. Maybe you do, but I think in general, it's a day where it sets up more confidence from what happens from here.
Yeah, that's great insight. What's interesting, I know you're looking at the open and after, right? 9:30, and that's where your 3-minute opening range is, and I love that aspect. Just real quick, I want to go back to the CPI. It's interesting that we have that whole 70 handle range, whatever it was, 75 handles, was split amongst 2 candles. It's a really interesting dynamic where that big candle right before the report, the market moved down right before the report came out. I'm convinced. There were sellers coming in before the report came out, and that was half the move. And that's tricky. And I think avoiding that whole dynamic, you think, I don't want to trade in front of the number. I'll just get out of my position right before the number. Even that might not have worked because of that. And your strategy of waiting until opening range, the opening range, the open of the market, I think is a great one and would have avoided anything there. I think today was really anomalous with even the CPI number.
And you look at it too, a couple things to look at when you look at a CPI number like today. Look at how I said it's a guess, but we're probably going to trade somewhere around where the CPI number came out, because the number was as expected. It wasn't a blowout one way or the other, which could definitely create a massive move in one direction. And here we are back in the belly of what this initial morning move was, right? And also what I like to do when you have moves like this, To me, the algos over anticipate, and this is where you could use them as an advantage, right? So I was able to use this sell-off as an area to step in and buy a really small position, not something I was going to scalp on a day trade, because if I was going to scalp it, I probably would have gotten stopped out. But instead, I bought a very small position on the up move back up in here, because I'm like, okay, it held that order flow VWAP. I know I want to be long in the big picture. This number meant nothing in the scheme of things. It didn't change anything. I think it's somewhat priced in. I could step in and buy a small position here because I have that bias from the opening of the year. Now you wait for the open and it's like all of a sudden it's bearish and you have all this selling coming in and you're like, okay, do I want to rethink this? And then you're like, okay, well, at that point, now I could either buy event contracts, or I could rotate out of that position and trade around, I think, which is actually one of the questions we're going to get asked today. Maybe we go to the Ask DYE now.
Sure. Yeah, no, that's great. And part of the feature of Develop Your Edge is we do have a question of the week that we choose from Twitter, from you, the viewer, who can submit questions via Twitter. If you do that, please make sure that you're following NinjaTrader, that you include two things with that. You include @NinjaTrader and you include the hashtag AskDYE with your question. If you're in the if you're in the United States, we can send you a nice little complimentary present for choosing your question. But today's question from a regular viewer, Anissa, she asks, or she says, please give us insights about trading around a core position.
Yeah, I mean, and hi, Anissa, and you know what? It's a great question. I think that I'm actually very impressed that I know Anissa is a newer trader, that she understands trading around a core position in general, because I could tell you this, at the beginning of my career, I did not necessarily understand this, right? This concept. And what does that mean for those of you that don't understand real quickly is you have a position. So like right now, my core position is long because I am bullish, at least in the intermediate, that I think that the S&P can go up to 4,100, right? So I'm trying to buy leaning on the order flow VWAP tag to the beginning of the year. So that's my thought process, right? So I'm going to be long small. That's a core position. How do I trade around it? Well, there's ways to do it. Like a day like today, you get a bearish look. If it wasn't CPI, I can tell you this. Number one, I wouldn't have stepped in and bought on this move because, I mean, who knows what was going on, right? But I because of the situation, I understood. I said, well, maybe the algos are giving me a chance to get in. Who knew they were going to give you another chance later? But once again, you step in, you get in your core position. Now you have a day that tells you it's conflicting a little bit with what your message is and what your idea is. So what you can do is, what I talked about is you can use, I think event contracts are great for this. I'm going to plug placeyourtrades.com because we talk about event contracts all the time. And of course, we use Trade-Evade to execute them. And then you have the ability to do that. Or what you do is you use regular options, or you also go back and you rotate out of that position. Now, it's going to depend on the context of the situation. It goes back to what I said from the beginning, situational awareness. On a day like CPI, if I have a swing position on and I know there's going to be a lot of volatility, I really just want to be small and try to hold on to my core position. So for today, I look at it and go, why try to overthink stuff and why try to over trade my position? That would be a problem, right? So I just try to stay small and stay with the direction I think that has more confirmation than the other. But when you have a core position, I like to use intraday, this style of trading to say, okay, it's this to me would normally represent a trend down day. So that's why I look at it and say, if I'm long on a non-CPI day, I most likely am going to hedge the position with either options or event contracts, or I'm going to rotate out of it with micros. And that's how I do it. And I think that that's more of the situational aspect of it. It's not necessarily the fundamental, like the way I would go in and click and do it, but this would be the way you do it. And you always, if you're trading around a core position, you always got to remember, you don't want to be too much against your initial position at any given point. Meaning that if I'm long, which right now I am, I don't want to be ever more short than I am long if my overall bias is in that direction, because it takes away from what I'm trying to do. right? So if I like a direction and I've chosen that path, don't try and make a bunch of money on a 3-minute chart to try to make your long position better. Don't ruin the trade. That's the best advice I give. Don't ruin it, right? Because I've done that so many times. It's like, be small, take a little hedge. If it doesn't work, like let's just say we were to break today, great. I made some money back, but I'm still long. Or if we explode, I lost on my short, but I'm still long. That's the mindset. I know we're running out of time, and I just want to show one quick thing. Go to cmegroup.com, everybody. I know some people probably have questions about what event contracts are. I really like them. They're daily options, and I think they're great for rotating in and out of positions, and I think they're a great way to learn about options and futures. So I think you can go to cmegroup.com. I think just go /event contracts, and it'll redirect you here. So that's all I've got for you today, Tom.
That's great. And just to clarify, for those of you who are new, a couple times Anthony mentioned 0 DTE. That's days to expiration, which is what an event contract is. It expires today. When we're using options lingo to explain the event contracts, and it's the same thing essentially. So
Yeah.
good stuff there, Anthony. Thank you so much. I mean, this is a great conversation, and I appreciate your time. And if people want to get a hold of you, just reach out to you on the website, right?
Yeah, AnthonyCrudele.com, Anthony Crudele on Twitter, YouTube's Anthony Crudele. Pretty much just Google it and you'll find me there. But Twitter's where I'm at the most. Always happy to answer any questions. I appreciate everybody coming in to Develop Your Edge and asking the questions. And it's always great to be with you, Tom. Thank you so much.
Hey, thanks a lot, Anthony, and thanks to you viewers. I'll be back in the afternoon with bars closing at 3:15, and we'll be back here next week with Anthony. Looking forward to it, and have a great trading day.
See you, everybody.